What's up, fam? It's your boy, and you already know what time it is, baby. Hey, in today's episode of the Craig Houston Podcast, you sit down with me and my friend, Patricia Casanova, who's not only my friend, but my realtor as well, and mortgage consultant, Giovanni Angelis, as we get into a whole lot of details that you as a first-time home buyer would love to hear and information that you can use. We leave you with 10 tips that you should take on your home buying journey, and I hope you enjoy the podcast. I want to introduce both of y'all to the world of the Craig Houston Podcast. Thank y'all for being here. Actually, the realtor that actually helped me sell my home in California. Great experience. It was one of the first things that comes to mind is how do you ever actually deal with getting a realtor that you know makes the perfect fit for you? And Patty was the perfect fit for our family. Patty doesn't know this. I actually went through about 5 actual realtors.
Oh, wow.
Actually selecting just one. Actually calling Patty. She had us on the phone. She hook, line, and synced us to actually get interviewed by her. And we actually wind up selecting Patty to be our realtor. And it was one of the most pleasant experiences that we've had. And actually the whole process always through. She told us how to get in on a bid, how to underbid just ourselves just a little bit to get more people to come in with bigger offers, and they did. We actually had the house available on the market for a week, and this thing I know we was in and out in 30 days.
Over asking way before this crazy market.
That's good. Good job.
Yeah.
Here today where we have Patty and then we have Giovanni Angelis. Like he's here with us as well. He's going to be the mortgage consultant on a lot of things that we're going to talk about today. Especially for you first-time home buyers out there. So if you don't have a pen, you don't have a pad, this is your opportunity to get it because we're going to get into a lot of details here. So I'll let Patty introduce herself a little bit more to the world, and then I'll let Giovanni as well, and then we'll get into some questions. Patty, over to you.
Thanks. Thank you, Craig. So my name is Patricia Casanova. I am a realtor here in the San Diego County. I hang my license with Berkshire Hathaway Home Services, you can see in the background. I'm in the Chula Vista area. I've been in real estate really pretty much since I can remember. I started off as a telemarketer, then I became, I was a telemarketer, then I became an assistant, then I was a mom for a long time, and then now I'm back full time. I'm a mother of 3. I'm a mother of 2 Frenchies, and yeah. Nothing really more exciting than I like to eat, drink wine, and and do real estate. Off to you, Giovanni.
Yes. So my name is Giovanni Angelis. I'm a branch manager at Liberty Mortgage. I've been in the business since 2005. I've been helping a lot of first-time home buyers, helping veterans as well, investors, and it's a really fun business, and I really just enjoy helping people and taking that first step and helping them create wealth through real estate. And that's what I truly enjoy. And thank you for being here.
Hey, I appreciate both of y'all for being here. So we're going to basically start off with one of the things that I started the conversation with was, what kind of qualities that you need in a realtor, because some realtors and some clients just don't fit.
Right.
Some of the things as a realtor perspective that you think about when it comes to actually knowing, Patty, that you actually mesh with the clients that you're actually going to actually do business with?
So what I really like to do is before I, take over a client or a client chooses me, I feel that the very first thing that we have to do is interview ourselves, both parties. I always like to start off when someone approaches me and tells me they either want to buy a property or sell the property. The very first thing that I do is schedule a time for us to meet in my office. Do you remember, Craig? We came in, and because I really want the client to get to know me as a person, who I am and what I represent, and also they get to know what I offer, what I bring to the table. But it goes both ways. It's very important that I also, both parties see eye to eye. We both have to be on the same field, same field, I would say, with the same goal, which is whether sell your house for the most or, in these days, get your offer accepted, and how we're going to get there, because it is really teamwork. It is really teamwork. It's not just the realtor that does everything. Everybody plays a part. So it's very important that first meeting when you meet with your realtor, make sure that, not only, remember, you're not only just interviewing that person, the realtor is also interviewing you, because it's so important that both have the same ultimate goal and everybody's on the same field. And that's what makes teamwork, work. That's what really makes a successful transaction, I would say. That's what I would say.
Yes, I can tell you for us, your personality popped off the screen. Like, especially when we, like, you convinced us over the phone. Someone else just literally like, we'll come up, we want to walk through the house to see it. We literally on the phone, and like, we was almost to a point where we was like, well, we already had think that we were going to go with, and you was just like, I'm not saying that we're a perfect match. Saying that maybe you should give me the opportunity by just letting us meet, come down to the office, and let's just have this conversation and see where it goes. And I can tell you, by the time we left the office from Berkshire Hathaway, we was floored about who we was going to select as our realtor. We had literally on the way home, and we already knew that we had.
Also, I think it's a little weird just showing up a stranger, showing up to your house, like, like, hey, let's get to know each other. It's kind of like a first date, right? Yeah. It really is. It's like a first date. You want to get to know the person before you invite them over to your house.
Absolutely. That's perfect. That's a perfect analogy for exactly how it should be. And that's what that's actually what got us in the right area of mindset to actually want to be there in the same deals with you. Yeah. With a partnership.
Absolutely. Mm-hmm.
Jump into the first question then, right? Besides actually figuring out how the relationship with a realtor is and how the realtor and client relationship should be, Giovanni, can you kind of walk us through who qualifies as a first-time home buyer?
A first-time home buyer is someone that hasn't written off any mortgage interest for the last 3 years. So even if you owned a home previously, but you haven't owned one in the last 3 years and haven't written off that mortgage interest on your income taxes, then you are considered a first-time home buyer.
That's interesting because I literally just found that out in preparation for this show.
Yeah, it's really strange.
Mm-hmm.
It's like the way they call first-time home buyers and what it actually defined is something that's totally different. When you say first term, I think that's the first. I bought my house the first time, and okay, every house I buy after that, I don't get the same qualifications. So that is very interesting. So basically, if you haven't claimed it on your taxes, a home property on your taxes in the last 3 years,
correct,
you actually first-term home buyer. Okay,
that's correct.
Okay, so what are some of the programs that I should say programs? Let's talk about what are some of the loans that a first-time home buyer has as options.
A first-time home buyer has several options as far as financing is concerned. You're going to have your FHA options, you're going to have your conventional options, and then you're going to have your VA options as well. With a conventional option, your minimum down payment is 3%. With an FHA, it's 3.5%. And well, with a VA loan, there is no down payment because it's 100% financing. So that loan program finances 100% of the sales price.
Okay, cool. So let's talk about FHA for a little bit. Who are the ones who? What would be the criteria? Some of the criteria that would be needed to qualify for FHA loan?
Well, you would need. Well, FHA is, as a matter of fact, one of the most flexible loan programs out there. So FHA is going to allow a lower credit score than maybe a conventional loan program. Okay, so the minimum credit score for FHA loan is 580, where with a conventional loan, you're going to need at least a 620, and to get really good pricing, you're going to need about a 640. So that's one of the one of the minimum criteria is that you have a minimum credit score of 580,000. The other criteria is that you have 3.5% down.
Okay. So on a VA loan, is there a credit score needed for that as well?
There's no real credit score per se for the VA. However, it's still the banks lending the money.
Right.
Correct. So the banks are the investors. So the banks are going to require like a 600. It's still low, right? But there is a 600 credit score requirement.
Okay, so when it comes to the conventional loan, I know you say it's 3%. So if it's 3% is the minimum and 20% is obviously the max that you down. 20% can get you to where you don't have to put down PM. You won't have to be covered by PMI insurance, correct?
Correct. So anytime you finance over 80% of the value, you're going to have a separate premium, which is mortgage insurance.
Okay.
And conventional is a good loan program. They allow you to come into only 3%, but you are going to have mortgage insurance. And FHA, you're also going to have mortgage insurance. There's some real differences between the two when it comes to the point where you're going to want to remove the mortgage insurance. For example, with a conventional loan, you can call your bank, order an appraisal, and if indeed you have that 20% equity, they'll remove the mortgage insurance. If you're in an FHA loan, though, even though you have 20, 30, 40, 50% of equity, you're always going to be paying for that mortgage insurance. They don't care of the percentage of equity that you have. So eventually you'll want to refinance out of that FHA loan, remove the mortgage insurance, and put yourself into a conventional loan program.
So one of the main things from hearing about the FHA loans, where a lot of people kind of refinance out of those, is because of the PMI insurance on it.
Yes, that's correct.
Okay, so now I know this is going to be more so county driven or state driven in certain. What is there some type of first term home buyer programs that are out there for people to take advantage of?
Absolutely. There's always, I recommend that you check with your local city, your local county, and state. They will all have a down payment assistance program. For example, here in California, for us in San Diego, we have a CalHFA loan. They will allow you 3%, grant you rather 3% for down payment and 4% or 2%, right in that range for closing costs. So, and then we have a county program where they can grant you or lend you about 17%. You come in with your own 3%. When you add those two, then you only finance 80%. So you technically don't have mortgage insurance in that down payment assistance program. And it's a real good loan program here in our local county, San Diego and San Diego City as well.
See, now this is the problem where I'm not going to say I had a bad realtor when I bought my house. I'm going to say she wasn't. Patty, my house, I had a different realtor for buying a house. That is something I wish I would have known about. Obviously, I had the VA loan, so it wasn't a big deal. But man, could you imagine I had 3% and all I had to do was get 17.5% from the county if I qualified for it? That's crazy.
Right. Now, I do have to add, though, that whenever you're using an assistance, you're basically using other people's money, right? Mm-hmm. Fair enough. So when you do that, there are going to be some very strict guidelines that you're going to have to meet. There is typically always a minimum credit score of 640 FICO for these assistants.
Okay.
Typically, there are income limits as well. You know, they don't want you making over an X dollar amount for a family of, X, right?
Right.
So the box gets a little bit smaller to fit in, but those programs are really good. It'll get you in the door. And I recommend that you check in with your local county and your local city and state.
Yeah, and that's what this series is about, building wealth through real estate, because people don't realize that basically when you get into real estate, you're giving yourself a leg up and actually, down your portfolio to a point where you can continue to grow in real estate, especially if your portfolio keeps growing into different properties. Right. Give you an opportunity to get in at basically on the bottom floor and work your way to the top, because you can actually hold that asset for years on years, and you got in with very little capital at the beginning.
Right. Mm-hmm. And there's another thing that happens, right? After the years and years, you're building equity, correct? Your property value is increasing lately, right? And your principal balance is going down at a later date. You can always maybe borrow against your house versus, at a lower interest rate versus maybe getting a credit card at a really high interest rate or a personal loan at a really high interest rate.
Absolutely. So for both of you, whichever one you want to go first, what is some of the problems that you usually try to make sure that you are aware of when you go into the process of dealing with a first-term home buyer?
Well, credit awareness is a big thing. Telling people what or how to manage their credit after they've started the process, making sure that they're not overspending. I always encourage everybody to make yourself a budget, see what you can afford, and really credit awareness. Don't go out and buy a new car while you're in the process. Don't go out and get a brand new credit card. Don't add more debt. or any more liabilities so that you may qualify for, for more or a bigger home.
Patty, over to you.
For me, I would have to say, I'd like to sit down with the first-time home buyer, and first I sit down and I talk with the lender. I have a really good conversation with their preferred lender. A lot of my buyers, I always have them meet with Giovanni first, and then this is a choice that I give them, but it's very important for me to have a clear communication with not just the buyer, but also with their preferred lender, because I want to know exactly what their lender is telling them. Because sometimes first-time home buyers, their expectations are either it could be very, very high. And it's very important for me to, as soon as I meet with the first-time home buyer, and especially if they're going to be doing this first-time home buyer program, if they're going to be using it, then I like to not only meet with the client, but also have a really good conversation with their preferred lender. That's, to me, it's very important. Expectations probably is one of the for me, when I sit down and meet with the first-time home buyer, sometimes their expectations are a little bit, up here. And it's like that with first-time home buyers, with second home buyers. I mean, the expectations are here. It takes about 2 to 3 months for them to get into the groove and just, start feeling the market and kind of get a better feel. But for me, aside from, the lender taking care of the credit and making sure that they don't go out and buy new furniture before they close, that's a big one.
That's a big
new
one.
appliances before they close. I mean, I've had it to where we're about to close and they go buy a washing machine and they go finance it at Home Depot, and we're like, no. And you keep telling the buyer, and you keep telling them and reminding them, hey, don't be out there getting a new credit card, or don't go out there and, spending, wait until we close. Nope.
Yeah.
So that's a big one. But expectations for me as a realtor, expectations is probably one of the, I wouldn't say a challenge, but it would be, the one thing that I like to sit down and get a very clear idea of where they are with their expectations.
Okay, so basically, it is setting the expectation and understanding that, and hoping that the client, reciprocate by understanding. Basically, you met with the home buyer. You understand that the home buyer is a client that that y'all both are willing to work together. They basically now understand some of the programs and loan options that they actually. Giovanni, did that lead us up to the pre-approval process?
Correct. This leads us right up to the pre-approval process. And in the pre-approval process, if you're working with a direct lender like we are, there are 3 things that we're going to look at. We're going to look at your income, we're going to look at your credit, we're going to look at your assets. Income, what are we looking for in income? Well, we're looking for stability. We're going to be looking at your income for the last 2 years. Is your income declining? Is it declining? What's happening? Are you making more money? Are you making less money? Why are you making less money, right? Your credit, we're going to look at your credit as well. We're going to, go over your payment history, talk about maybe if you have collections or if you have late payments, what those were about, because we will most likely have to explain it to the bank. And then we're going to look at your assets as well. Where is the down payment coming from? Where are the closing costs coming from? And make sure that those funds are seasoned and sourced, meaning the first part is the seasoned part. The funds need to be seasoned in the bank account for 2 months, right? And then sourced. Where is this money coming from? Is it payroll money? Is it your 401k money? Is it cash? Hopefully not cash, right? But those are the 3 things that we're looking at. Those are the 3 pillars: income, credit, and your assets.
So cash is the hardest one to prove then. When you go,
absolutely, there's no
trade.
Yeah, we don't know where it came from. The source is, mysterious.
Okay, so if you made a cash deposit 2 months ahead of time for a home loan that you wanted to take on, it's still the toughest thing to prove.
Well, again, we ask for 2-month bank statement. So if I see the deposit, then yes. If I don't see the deposit, then it's
Got you. So, wow, I didn't really think about the whole cash thing as an issue where it may come up to where you have to explain, and then it's really like, okay, you still got to kind of document where it came from. And
Absolutely.
Mhm.
And some, and it has to do with privacy laws and money laundering
right.
laws and things of that nature.
Okay, so I know we are getting into it, but what is the difference between pre-approval and the approval process as you approve for the home loan that you're actually going to take on as underwriting?
Okay. A pre-approval is just someone that basically looked at your stuff and wrote a letter and say, yeah, you qualify. What we actually do is we scrub your income, we scrub your assets, we scrub your credit, and we go through the whole process and we get it underwritten by an automated system or an underwriter, and then we can issue out your letter, and we also issue out an approval, so that when you submit your offer, you can submit your offer with a pre-approval and your approval as well, so that the seller and the selling party realize and know that this person has gone through the extra steps to make sure that they can open escrow and close escrow successfully and in a timely manner.
Okay, copy. So all right, so we have the pre-approval letter, and now the home buyer is going shopping, right, Patty?
This is where I back off, and this is where she comes back in the game, and that's really where the fun begins. No one wants to deal with paperwork. No one wants to deal with income and credit. The fun part is looking at homes.
Here I come.
Oh, yeah. Is that what we had? So you're going shopping, and now I know there has to be an expectation set at home.
So I would rather when I have a client that's a buyer, I would rather have them have an approval versus a pre-approval, especially in these days because it's so competitive right now. I want to make sure that my client is, when we go to submit that offer, it's there at the top, and the seller knows, and the seller's agent knows that we have an approved, not a pre-approval, an approved buyer.
Correct.
Slow down for me 1 second there. Why is that so important for you to make sure that the other seller knows that you have an approval versus an pre-approval?
Like Giovanni said, a pre-approval is just somebody looking at your file and just for giving you a letter like, oh yeah, you qualify, you look good on paper, you qualify. And a pre-approval is a little bit more in depth, wouldn't you say?
Yes, we've already scrubbed through the income, scrubbed the assets, scrub the credit.
So when I go to submit my offer and I have my approval letter from the preferred lender that my client chooses, then the seller's agent and the seller is able to see that I have an approved buyer ready to go, ready to open escrow. So that to me, I'll go ahead and I'll still continue to do work with a pre-approval, but with things being so competitive right now, I would rather have the seller and the seller's agent know that hey, we are serious buyers. Not only are we're ready to open escrow tomorrow if you accept our offer. And having an approval letter from it just assures them that we're qualified and ready to go.
Got you. So this is based on contingencies then, basically. But you don't want the loan to be in pre-approval, because if it's in pre-approval, it could fall through for some odd reason. Like you said, somebody go buys a washer or a furniture.
But contingencies are a little bit different. That would be the loan contingency, but that plays into, that comes into place. First we got to go through inspections and we got to go through the appraisal. For me to come in with an approval and a good offer, a strategic offer that works, that me and my client have already talked and discussed, and we're okay with the terms and the date of the contingencies, and everybody's on board, then, having that approval letter for me is very important for me to be able to get my client the property that they want and get their offer accepted.
Oh, gotcha. So I guess the one thing is, so in this loan process, we're saying, when you go in with your client to start home shopping, basically you want the approval because that tells you the fair value dollar that they can actually approve all the way up to. You're going in at that price at the max if you need to, but definitely you got wiggle room if you need it as well.
Yeah. Would you say that?
The main goal is to remain The main goal is to help our buyers stand out from all the other buyers. We do so by taking extra steps. And some of the extra steps is getting the person approved, where everything's been looked at, everything's been scrubbed. This way, we're competing out there, multiple offer situations, and we want to make sure that our buyer stands out as a buyer that is serious and is ready to open escrow.
So, Patty, does it put you on a stricter timeline when it's already an approval in place?
No, I mean, so I believe the approval is good for what, 3 months?
Right.
So after 3 months, if we still don't have a property, which in some cases it's been the case because it's been so competitive, then at that time, then the lender will reissue me another approval letter.
Got you.
Mm-hmm.
Okay, so you're going shopping with the buyer, and y'all looking at properties. So do y'all have I know you've already met with them and kind of like understood what they're looking for and shopping for, but now that they have the letters in place and now you're about to start going shopping, the market may have shifted in that week or two in between the loan approval process. Do you re-engage about what are still some of the things they're looking for, or you start sending them to MLS right away?
I put them on an automated system and I'm constantly checking. So for properties that, that I go back and I check for back on markets, or if anything was, for what, I go back and I look at old inventory as well for my clients. With the market shifting, I have to just study the MLS every day before I send them out the properties. I have to look at what's going on the market. But pretty much we have a goal when we first meet. We sit down, we have a goal. We know what type of property that we want. We know the price that we want to be at. As far as with the market changing, then absolutely, if the market goes up a little bit more and the prices go up, then I have to redirect my search and, adjust it to get what it is that they're looking for, still with the same idea, but maybe adjusting it in price a little bit.
So I know with actually being in San Diego is one of the hottest real estate markets out here in the United States right now. Have some of your clients been priced out of their price ranges due to what their expectations were in the first place?
Oh yeah. So I'll share this story with you. I had a buyer that we were both working, and when we first started, he was just like, nope, it's too expensive. I don't want to go that high. He started submitting offers. And I said, hey, come in at this price. I know it's higher than what you think the house is worth, but really, I really do feel that this is the house. Based on how the market is moving, I really do think that this will get you the house. He passed on it. Said, no, I want to go up to this price and this is where I want to stay. Months later, maybe like 6 months. I mean, it was getting to the point where he was like, you know what? I don't want to do this anymore. I don't have patience for this. My heart keeps getting broken every time I submit an offer. I am done. So I went door knocking for him. And I said, look, I'm going to find you a house in that same area that you wanted to be at. I did find him a house, but they ended up not buying the one that I went door knocking. But I did find him another one. We ended up paying, I think, was it $20,000?
At least 20 to 30.
Yeah.
Wow.
Above of where I had told him initially to come in at. So, yeah.
So I mean, I've been reading articles lately, especially in Bloomberg and in other articles as well, like Wall Street Journal. I've been seeing that bidding wars have been about 76% of actually offers that's being put in initially have been contested.
And it's very hard because I know that a lot of the offers that are submitted, they remove contingencies, they waive appraisal contingencies, and I don't feel comfortable doing that. I always tell my buyers whenever I meet with them, we'll sit down when it's time to write the offer. We're going to go through the purchase contract and we're going to sit down and we're going to talk about a strategy about how we're going to submit the offer and explain really the contingency dates. I do give them the option, hey, you can waive your contingencies, but I strongly don't suggest that's something to do, especially when you're, with your inspections, with the appraisal. I really don't feel comfortable doing that. So I just say, hey, patience, patience right now is probably number one. Patience is key right now, I would say.
So with the contingencies, like I understand exactly what you mean. That's the kind of dangerous contingencies you can waive.
Well, you can waive your inspection contingencies and you can waive your appraisal contingencies. Now, if you waive your inspection contingencies and you buy the house, and you still should go in and do your inspections, right? I mean, you still have the ability to go in and do your inspections. The thing is, you can't cancel because you've removed it. So if you submit your offer with removing your inspection contingencies, then you're buying the house as is. And what if there's something wrong with plumbing, with foundation, with things that you weren't expecting, right? And then obviously the appraisal contingency, which is do you want to pay more than what the house is worth? I don't know.
Contingencies, yeah. Contingencies are basically markers that help protect the consumer, help protect the buyer. One of them, for example, like she mentioned, is inspection. Make sure that the property, passes the inspection.
Satisfied.
Appraisal contingency. Make sure that the property is worth, the value that you're in contract. And then you're going to have your loan contingency, which is absolutely, I'm going to say, your last contingency to ever release. But these are markers set in place by the contract to help protect the consumer and help protect their rights, which is ultimately what we want to do, right? We want to be able to help the buyer. We want to be able to put them in a good situation financially and a good home, but we also want to protect their rights.
Absolutely.
And want to make sure that they buy a good property. So these are markers to help do that. So waiving these contingencies obviously adds a variable, right? Adds a certain level of risk. So you just be cautious if ever doing so.
Yeah, definitely.
Right. Absolutely.
And that's one of the things that I would recommend doing ever. Just be patient.
Absolutely. So back to the bidding war part of it, psychologically, that has to beat down home buyers. You were saying about your one.
Oh, yeah.
Yes.
How do you keep them engaged in the home buying process when they start to see that they're getting beat out by cash offers or people waiving contingency?
It's hard. It really is, because it could be it's stressful. It's a stressful situation, definitely. I have had some buyers that have said, you know what, I'm just going to hold off. I'm just going to wait and wait it out and see what happens. And I do have the buyers that see the light at the end of the tunnel and say, you know what, I'm just going to continue to move forward. It's very hard to try to keep them in a positive note, because I feel like sometimes I'm, as an agent, it's also hard because I'm all constantly trying to schedule be the first one to look at the house, or, trying to, make sure that I'm whatever I can do for my buyer to make sure we look at the house first, we submit the highest and best, we strategize over, the offer that we're going to submit. And also, it's also emotional for the consumer. It's emotional for the buyer, where, hey, hurry up, let's go see the property. Hey, let's submit this, let's do this, let's work it out this way. So it is very challenging. I don't have the key or the secret sauce as of yet to know, how I can keep them positive and with a positive outlook. It's just a matter of always knowing that there is a light at the end of the tunnel. You know, I mean, there's so much that we could both do, and it's challenging. It could be very challenging these days.
So in San Diego, what's the average time for a house to come available on the market and come off at this point in time?
Ooh,
it's like a week.
7 days.
A week.
It is crazy. It is crazy. I mean, you put a property on the market and you see it on there for 9 days, and you're like, hey, what's wrong with this one?
Wow.
Why isn't it sold?
Yeah.
So, man, that's crazy. 7 days is not a lot of time. So basically, that's like a full-time job for not only you, but for the client as well at that point in time.
Yeah, you actually bring up a good point. I think the flexibility is key for clients, right? The more flexible you are is in regards to like what areas you want to live in, the more options you're going to have, the more inventory you're going to have available to you. So just being flexible and being patient, and when a property does come out in the market, having that time, that flexibility to go out and see it instead of like, saying,
Yeah.
I'll go on the weekend. Well, guess what? It won't be, it won't be around in the weekend.
Mhm.
You got to go tonight. You got to go see it tonight.
I've seen it to where they're hosting open houses on Thursdays from 9:30 to 11 a.m.
Hmm.
on a Thursday.
Doing wow.
Yeah. Yeah, I just saw that. I called the listing agent and I said, "Hey, my client wants to see it. Well, they can come to the open house I'm having on Thursday from 9:30 to 11."
So
I'm
you
like,
can't see it.
"We can't see it."
Wow.
Yeah. Yeah.
That's crazy. And I guess, I mean, because so we're really in the trenches of a seller's market at this point in time.
Oh yes, absolutely.
Yeah.
Yeah, that's crazy. Okay, so yeah, I guess that leads me to my next question of national average is saying that they're expecting to see 13 to 18% gains in the housing market between now and 20.
Mhm.
How are first-time home buyers actually going to be able to actually get into a home at this point in time? Is they going to have be approved for a whole lot more, or they're going to have to, put down way more cash out of their own pockets? What are some of the things that it may be a challenge for them at this point in time with home prices climbing?
Well, maybe they could, in their offer, maybe they could offer their left kidney and their firstborn. No, I'm joking. Subscription to Netflix
Yeah, I
paid
know.
for.
But you bring
Gas
up a good
card.
point. Affordability, right?
Yeah.
Affordability. It's rates. There's a lot of pressure for interest rates to keep rising. There's a lot of market pressure, and homes are appreciating, like you said, another 10 to 18%. So how are families doing it? Well, they're getting together. You you know,
Combining incomes.
yeah, they're combining incomes. That's the way to do it. I mean, that's how some people are doing it.
Mm-hmm.
Yeah, so because I mean, I still get the Redfin report for our last house, and it was like, man, that thing's almost $700,000 now. Like, can't imagine I bought when we bought it for 430. Like at this point,
Mhm.
Yeah.
I can see these prices are just going up and going up. But I think also people have fear of prices coming down so drastically in the next couple of years as well too. Is that something that they should be worried about, or you think home prices are just going to stay steady through all this time that we've been?
I'd like to. It has to do with just real basic supply and demand, right? So
Yeah.
we're in a housing shortage, at least locally here in San Diego, California.
Mm-hmm.
So as long as you have less homes and more buyers, I think demand is there and the prices will continue going up.
Mm. Yeah, so because I was looking at KBH Homes, they are still behind about well, it wasn't KBH Homes. I think I was looking on the Fred
Well, for
St.
new builders,
Mm-hmm. New construction.
About like another 19 to 20,000 homes per county behind in building. Obviously we can see we ain't gonna get into economics at this point, but lumber is going up higher.
exactly, the
Yeah.
cost to build is going up.
Mm-hmm.
That's really crazy. Let's talk about how do you walk them through preparing the best offer, Patty, when it comes to making an offer on a home.
Well, highest and best.
No, but I would
and
say
best.
definitely make sure you have your proof of funds, submit it with an actual approval, a well filled out, complete contract or offer.
Mm.
And yeah,
Yeah.
it's true. Make sure that we have the proof of funds ready to go, your pre-approval. But really, it's like that buyer that I was just telling you about. Being aware of the market and how fast
Mhm.
it's going and how competitive it is. So when I say highest and best, let's offer really, what you feel the home is worth. Are you okay with offering $20,000 above asking? Because right now that is really the norm. People are offering above asking. And you can pull comps, and and that's what I do. I pull up comps, but now I'm starting to get in the habit of also not only pulling up comps from the properties that have sold, but I'm also looking at pendings because that lets me know how the market is moving, right? So it's very important. You don't want to overpay for the property, but at the same time, if you really want to become a homeowner in this market, you also got to be aware of how the market is moving. And that's what I say, highest and best right now. I've had clients that were on a waiting list for new construction, and that's literally what they said. We're sold out, but we have a few left. Submit your highest and best. And that's new construction.
Yeah, so that's so you're basically, as a buyer, you're in a kind of like in a situation where you're locked into this box of you have no option if you want to be competitive to not think that you're getting a deal. You got to understand that the deal is you may have to pay for the deal.
You
got to pay to play.
Yeah. It really is. And also, getting them prepared, having the buyer educated on, and that's when the first time, the buyer's presentation really comes into play, because then we can talk about, the approval, the proof of funds, but also, the earnest money deposit that we call the EMD. That's a big part of it too. It used to be where 1% of purchase price is what you would typically see, but now it's kind of like the more deposit that you put in, it feels like you have more skin in the game. Also the more down payment. I see a lot of sellers, and I've seen this representing buyers. I've seen where some buyers are qualified for, they can come in with a 3% down, and they look at my offer, and we have a strong EMD, earnest money deposit, which can be like 2% purchase price, but they see us coming in with a 3%, and they're like, no, we're going to go with this offer that is coming in with 20%.
Yeah.
So, so pretty much just educating the buyer and giving them all the information, and just kind of, when I say educate and walk them through, explain how the market is doing, that comes in with, expectations of what can you expect from this current market. And that is just something that, keeping them motivated. Well, that would probably be, also having them know and be educated in that, or know, what to expect during the process.
Yeah, I don't think nobody's sleeping in this market.
No.
Market, not knowing how booming the housing market is, but I think that some people get emotionally tied to a house when they see it and they put that offer in. They think, oh, that's going to be mine, but then they don't realize that it's a hawk coming through.
Yeah,
waiting
with 20% down. Yeah, it's true.
It is true.
Yeah.
To really, I think that's well in our. Hopefully we have a follow-up podcast after this where we talk about sellers, how the sellers are actually thriving in this market right now, and what does it take to be a seller at this point in time.
And who's selling these days?
Yeah,
who is selling these days?
We got out here and we found houses at that point in time, we thought they was out too priced out for our liking, and then like you said, it never came down. So they just keep trekking up. So it's just like, who is selling their property at this time? Because now you going knocking on doors. It's like you knock on the door, somebody's return rebuttal is going to be, where am I going to move to?
Right. Oh yeah, that's exactly. Yeah, I deal with that. But then, I have, let's talk about that really quick. We'll touch on that subject. I got this guy over here, this one over here, that doesn't help the inventory, because look, he's already making a face. He believes that you should keep your property and rent it out.
I believe in creating wealth through real estate.
Okay, see, that's what I'm talking about. Like, I'm on your page too, Giovanni. I'm with you.
You see?
We need the inventory.
But you're right. Who is selling, right? Because a lot of people do want to create wealth through real estate, correct?
But don't you create wealth by selling, especially in the market?
Well, yeah, we're on different seasons in life, right? Some of us are in spring, some of us in our summer, some of us are fall, right? Some of us winter. So
So I will say, I'm gonna give my 2 cents on this, Patty. And you're gonna probably be like, "Oh God, I should have started."
You should have said it, Patty.
2 cents. My is that if you are in active duty in the military, I'm guilty of selling, but really and truly, you probably shouldn't sell any of them, because if you just move from property to property, you put a renter in there, now you have multiple assets. If the Navy or Army or Marines decide to move you anywhere, that's an asset you have at another location, but you have a real estate property because you're putting a renter in there now, and then you're moving into another property that the government, once again, is going to give you zero down on. They're going to live there, and now you're living there for however many years. You're growing equity in 2 properties versus 1 property, or now they're turning it into 3 properties. And it's just a cascading effect where you could be a millionaire just actually owning real estate. And where this whole conversation builds around building your wealth through real estate. I like how I tied that in, right? I like how I did that.
But I believe in that. I truly believe in that.
I do too. And I think it's one of the things that we don't teach often enough in the military, where the military just say, hey, you got these benefits. Hey, you get this allowance. But at the end of the day, those are things where if these young veterans and or ones who do their full time understand, in a 20-year career, you can have maybe 5 houses. I've moved 4 times since I've been in the military. If I would have thought about this then, I would have probably 4 properties at that point in time.
Right.
And those 4 properties, with this booming in the market, that could possibly be, sitting $800,000, $900,000 worth of real estate that you're making cash capital on over that time frame too.
And that is why we have a shortage.
No comment.
And I mean, yeah, you're right. Absolutely. It's not going like it's going to end no time soon. We look like we may be shorted to at least about 2025 from what projections at this point. So we talked about, pretty much all the things that 10 tips that home buyers should look into when they're actually considering buying real estate, especially in this hot market in 2022. But is there anything else you want to leave the listeners with at this point in time?
I would just say when you do get a realtor and a loan officer, make sure you have a good team working for you, because it is going to require a team to get you in escrow. It is going to require a team to get you out of escrow, and it's going to require a team to get your offer accepted. So that's kind of what I would just encourage. Make sure you have a good team, a good realtor, lender, partner relationship, business relationship. Someone, that will answer your phone calls during the weekend, answer your questions or concerns, or if you're freaking out and you just need someone to chat. But basically, yeah, you need a good team working for you. And if you guys have any questions, we would definitely love to help you.
Definitely. Patty, anything?
And for me, I would say, even though it's competitive right now, this market really is very competitive here in San Diego. But there is light at the end of the tunnel, and real estate is still the best investment that there is. Like you just said earlier, even if you just purchase it and live in it for a little bit and rent it out or sell it,
or sell
it, it's still it's not a loss. In this market, it isn't a loss. I would say it's still, real estate is still a good investment. I think it was Mark Twain that said, buy land, they don't make any more land, or something like that. I strongly believe in that. Wasn't it Mark Twain? I see it all the time.
Maybe it was Patricia that said that.
Okay. All right. So I appreciate y'all for both being here once again. Thank you, Patty, Patricia Casanova, and Jill, for actually showing up for me today and doing this podcast with us. Man, we maybe need to run it back again for the Stellar side of the house, but we'll talk about.
I would love to. I don't think he needs to be here for that.
It's all about just creating wealth, right?
It is. It's about creating wealth.
So I appreciate it. Thank you. We are signing off from the Craig Houston Podcast. Can you guys stand by?